And we have started with GST a little bit, and I have uploaded videos also, so you can watch them. But I'll just summarize a little bit what we have done last time and then move forward. Okay? But you haven't missed a lot, so the real lecture starts from today. It was just an introduction. So what we did was, the framework of GST and lots of introduction in how the GST was started in India and how the old system got replaced. So you can just watch the videos for that. So then we talked about the GST rates. So in India, everything is now under GST. So it's only indirect tax in India now. Earlier we used to have excise. Of course, still excise is there because petroleum products are still are not under GST. So excise, sales tax, octroi, there were so many other laws which have been, become one now. So the tax rates are basically 0% for all the necessity items like milk, okay, and 0.25% for diamond, 3% for gold. If you buy gold, you have to pay 3% GST. Then there are 5, 12, 18, and 28. So I also discuss about, how the rates have been designed. Most of the goods fall in the category of 5%, 12 and 18, while most of the services falls in the category 18. So I'm just skipping that. We have already done. So I'm, as we go along, so we'll again discuss them. And there is something called compensation cess. Basically, there are certain products which are called sin goods, like the beverages, cigarettes. So there the government was levying very, huge tax before GST came in. So they couldn't bring it down to say 28%. The taxes what we are paying on cold drink like Coke all is about 60%. So they have done through a mechanism called compensation cess, which has been added to a 28% this thing. And this cess was supposed to be there for 5 years, but they have extended. So maybe that this will also go over the time. So we just move on to, okay, so here we are, registration, though we have done. So I'm just starting, this is an important part of our understanding of GST. So, whosoever is doing business, because GST is applicable to everyone, okay, and there are certain exemptions to given to certain organizations or certain businesses. So everybody is supposed to get himself registered under the GST, okay. So goods and services tax registration provisions are in India governed by GST Act. So there is a law called GST Act, and registration is mandatory for businesses based on certain turnover, nature of activities and other specific criteria. So here is a threshold limit. So anybody, it's been like services and goods which come under the ambit of GST, and everything, if you are a service provider, okay, then businesses with annual aggregate turnover exceeding 20 lakhs must register, okay. So if you are, providing services, then, and if your turnover is more than 20 lakhs, you should take a registration. But this figure goes to 10 lakhs for certain states, special category of state like Sikkim or Arunachal Pradesh. For some hilly areas, the limit is now 10 lakhs. So anybody who's providing services, like, like I'm providing services, I'm a faculty, a visiting faculty. So if my turnover or my income is more than 20 lakhs per annum, since I'm in Delhi NCR, so my limit is 20 lakhs for me. So I need to get myself registered. Similarly, for good suppliers, the limit is 40 lakhs. Yeah.
So, but for example, say like you mentioned you're a visiting faculty.
For example,
you mentioned you're a visiting faculty.
Yeah.
Say you have another business on the side, and the cumulative amount exceeds 20, but the individual amount of either.
Okay, that's a good question. So actually, if you see, it's an aggregate turnover.
Oh, right. Yes.
Okay. So whatever is the turnover, whatever businesses I'm doing, under my PAN, I've got one PAN number, permanent account number. So under one permanent account number, under one business, all kinds of revenue I'm generating for the whole year, if it crosses 20 lakhs for a service provider, I need to get myself registered. For goods, it is 40 lakhs and 20 lakhs in special category. Now, certain special category states are given below, which are Arunachal Pradesh, Manipur, Mizoram, Meghalaya, okay. Just keeping it here, then just remind me. Okay. So these are the special category states. Okay. So for that, the limit is 20 lakhs and 10 lakhs. 10 lakhs for services, 20 lakhs for goods. Is that okay? So mandatory registration regardless of turnover. Now, there are certain businesses where you have to get yourself registered, even if you are below the threshold limit. Okay. So what are those businesses? Interstate supply of goods or services. When you're supplying goods across the state to a different state, from Delhi to Gujarat or from Maharashtra to Kerala, then there is no threshold. The person who is selling goods outside the state, he must get himself registered, irrespective of what sale or turnover he is doing. Okay. E-commerce operators or aggregators like Amazon, Flipkart, okay, or any other aggregator. So they need to get themselves registered, and we will be covering that. So don't worry about it. We will be having some, examples so that it gets clarified. So e-commerce operators, you can just take it like Amazon. They have to get themselves registered. Business, or some new e-commerce business comes, so he is having a very less turnover. He needs to get it registered from the day one. Business liable to pay tax under reverse charge mechanism. Now, under GST, the person who supplies services, he is supposed to pay the tax to the government. The recipient is not supposed to pay tax to the government. But sometimes the supplier is too small, then in that case the government says that the recipient is going to pay on behalf of the supplier, and that provision is called reverse charge mechanism, and we are going to dwell into that more in detail. But this was the most provision which was was not taken very well by the industry, but they had to just they made a lot of amendments, and it is has a very limited application at the moment. But the government would like to, it's an anti-evasion kind of a provision where they would like this instead of small suppliers, the big customer, he pays the tax on the behalf of the small supplier. Non-resident taxable persons. So if you are a non-resident Indian, okay, and we'll understand what is a NRI, what is the definition of NRI, and we do under the Income Tax Act. So if you are a non-resident taxable person, then if you are doing business in India, you are supposed to get yourself registered, irrespective of the turnover. Casual taxable person. That means suppose you go and in an exhibition you participate, sell your goods. So you are a casual taxable person. So in that case also you need to get yourself registered. Event-based suppliers, for example. Agents supplying goods on behalf of others. We'll discuss that later. Businesses involved in taxable supplies via e-commerce operators. So the businesses which are selling their goods via the e-commerce operators, okay, when we buy goods, there is some agent who is through which the Amazon supplies the goods. So those needs to also get themselves registered under the GST. Then there is a TDS and TCS deductors under the GST. It's applicable only to the government organizations. When you deal with a government organization, they will deduct something from you, even if you are a supplier. Okay, so suppose they deduct a percentage, or 1% or 2%. So you are supposed to pay the GST, but they are going to deduct something, okay, which you can claim, because you have already paid some GST, because government has already deducted. So it's again a kind of anti-evasion, or a kind of the government doesn't want to lose any revenue. So it says you pay, and then the government will give you a certificate that you have paid some money to them in form of GST, and you can claim it. While you pay the final tax, you can take the credit of that. Okay, so we're going to again discuss about those things in more detail as we progress. Then there is a voluntary registration. Irrespective of the turnover, even if you are a very small operator, you can still get yourself registered. Now, what's the fun of that? Because ability to issue tax invoices, that means you will be from the day one, if you are registered, you can issue a tax invoice. Okay, you can mention how much GST you are charging, and you are eligible for input tax credit. So whatever tax you are collecting from your customer, that you can claim it as an input tax credit. And maybe by the evening we'll cover the input tax credit more in detail and understand how it helps. Basically, ultimately the ultimate customer pays the tax. So anybody who's supplying in between, the manufacturer, the distributor, the wholesaler, the retailer, they are just charging tax, and it's a pass-through kind of a burden on them. they pass through the next person. Okay, so ultimately it keeps passing on, and ultimately the tax is paid by the customers. So anybody who is paying in between, he just pays and takes the benefit of that tax which he has paid when he supplies the goods to someone else. So ultimately, when it reaches to the customer, he is paying the tax, and others, they are just, the persons who are collecting, taking credit, collecting, taking credit, and ultimately the customer pays the amount of tax. Okay, so we will understand that more in detail. If you are not registered, in that case, what happens is that you are buying something and you are paying a tax, a GST. You are not able to take an input tax credit because you fall under a threshold limit where you don't have to get yourself registered. But if you are a business person, so you are going to, you need that tax credit. Otherwise, that will become your cost to you. Okay, and you are going to charge it to your ultimate your customer. Now, your customer is also basically not the final customer, so he will get the goods costlier. So he would like to purchase from someone who is registered so that he can take the input tax credit. So he will not buy from you. If you are unregistered, then the business person who is supposed to buy from you, he will ask you if you are registered. You say no. Then he says, okay, I'll go to some other person because then I'm not going to get a tax invoice. So my cost is going to go up because you are going to bill me the GST also. Your cost will be including GST. Okay. Otherwise, you are going to match the same price that the other is charging along with the GST. Then only you can supply to me. So we'll understand this more in detail as we do examples. Okay. So a voluntary registration is permissible. That means you can apply for registration immediately. It will benefit you. If you think that you are going to become bigger and bigger, so why not to just be under this tax bracket immediately into this GST. Then there is a composition scheme. Now there are certain organizations, they think the GST is a complicated thing, and they are small organizations. So for them there is a relief that they don't have to get themselves, they will get themselves registered, but they will get themselves registered under a composition scheme. Now what is this? Available to small businesses with a turnover up to 1.5 crore per annum. Okay, and 75 lakhs for a special category states. So if you fall under this bracket, then you can choose for this composition scheme. What happens? Pay a tax at a reduced rate of 1% for traders and 5% for restaurants. So if you are running a restaurant, okay, if you are running suppose a restaurant, now your people you are selling is our final customers only, isn't it? So they are going to bear the burden of the tax. So if you get yourself registered as a restaurant businessman under the composition scheme, you just pay 5% tax, okay, nothing. Then you can't take any input credit, okay, but your life will be simple. You have to just file one return per annum, and the tax compliance burden will reduce for you, okay. So it is only for those people for whom it suits them, okay, because for 1.5 crores turnover or below, they can enter into such kind of this thing. They will enter into the composition scheme. Cannot collect GST from the customers or claim ITC. So those people will not be able to generate an invoice. They can't mention the GST that I have charged you GST. If you are a cafe owner and you are covered under the composition scheme and you applied under that, you are registered under this, then you can't say that I have charged you 5%. But you have to pay 5% to the government. So whatever charges you are making to your final customer, suppose you make a sale of 1 lakh, 5,000 you are going to deposit with the government as GST. That's all. But you can't mention in the invoice that you have collected some GST from their customer. And you can't claim any ITC since you are not raising an invoice under GST and mentioning the GST GST. So you will not be eligible for any input tax credit. And a cafe owner will normally will not require that kind of a thing. Even if he is supplying to some organization, they can't take an input tax credit on buying lunch or tea or something. So there are certain items on which you can't claim GST input tax credit. So the restaurants fall under that category. So a restaurant may not need to be register. So they are not going to lose anything because their customers, even if they are corporate world, they are going not to be able to take any input tax credit. So then exemptions from GST registration. Entities not liable for GST registrations include agriculturists. So if you are an agriculturist supplying produce grown by them, then you don't have to pay. Then you don't have to be registered. You are not liable for GST. Businesses dealing exclusively in GST exempt goods or services. If you are dealing into certain goods which are totally exempt, like suppose you are supplying milk, on milk there is no GST. Okay, so they're like this, there are so many other things also. Persons making supplies under the reverse charge, for example, only the buyers to the paid tax. So, and suppose you are persons making supplies under the reverse charge. Okay, example, only buyers pay the tax. So here, if you are, then you need not. Suppose you come under the reverse charge mechanism. Okay, since you are not going to pay the amount to the government, so then you may not register yourself. Okay, so you may make them. So we are going to deal more about this RCM, this last paragraph in today itself. GST exempted goods. So what are the goods which are exempted under GST? Agriculture products, health and hygiene certain products, fresh fruits, vegetables, nuts, pulses, milk, curd, lassi, buttermilk, unbranded food grains such as wheat, rice and flour, fresh meat, fish, eggs, jaggeries and unprocessed sugarcane. So all these are basically exempt under the GST. So anybody who is doing business in such kind of a product, he need not get himself bother to get himself registered. Then you have human blood and its components, sanitary napkins. So these are basically health and hygiene products. So if you are into this kind of a business, then you don't have to register because they are exempt. Then education and literature. Now it's an education industry. Okay, so education is also outside the GST. Handicrafts and traditional goods, environmental goods, livelihood essentials. So printed books. So when you buy books, okay, and newspapers, children drawings and coloring books, so they are also exempt from GST. Then khadi and certain handicrafts, so they are also exempt. Environmental goods like seeds for sowing, compost, manure, okay, livelihood essentials like puja samagri, okay, and other things. So unprocessed or raw wool, kites. So if you are doing a business of kites, you not to register. Education services, okay, healthcare services, transportation and financial services. So they are also exempt. Services provided by preschools and schools up to higher secondary education. Education services provided by institutions for courses recognized by Indian law. So maybe then you deposit your fees in this college, you didn't pay any GST. Or you charge any GST? Is there any GST on your this thing? No. So that means the universities are also exempt if it is recognized under the Indian law. Okay. So colleges providing services by offering education to the students. So if they are providing education which are recognized by the Indian law, so the education services are also exempt. Previously, even the professors, they were also exempt from paying any tax. But then now it's up to the threshold limit. So if they cross that, they have to pay tax. So healthcare, service provided by hospitals, clinics and nursing homes for medical treatment, ambulance services, services provided by blood banks and cord blood banks. So they are also exempt from GST. Transportation, non-air conditioned public transport, buses, metros, local trains. Okay, so they are also financial service like interest on loans. So when you take a loan for the bank, they are not going to charge any GST on that. Deposits and advances. So when you deposit a fixed deposit and you earn an interest on that, the bank is not going to charge any GST on that. You don't have to pay that. Okay. Sale of foreign currency by banks. So if you are traveling abroad and you have to buy dollar or pound, so you don't have to pay any GST on the charges which the bank is going to charge as a commission or something. Okay. So now then charitable activities, they are also exempt. Government services provided by the government, excluding those provided by post offices, insurance services. So when you buy insurance policy, you have to pay GST. Diplomatic and consular services provided by religious places for conducting religious ceremonies. So they are also exempt. Okay. So now we come to the registration process. Now when you get yourself register, so you have to make an application. Okay. That application is online on GST portal. I'll just show you the portal. Submit the required documents like PAN, Aadhaar, address proof and bank details. and you will be issued a GSTIN number, which is a 15-digit number. So you will be allotted a 15-digit number, and 10-digit number will be your PAN number itself within the GST. I'll just show you that how it is done. So there is a at the bottom I have just mentioned for registration process. So I'll just take you through, but then we'll cover maybe more in detail when we start looking something. Oh, it's not there. So there is a GST portal. I'm just going to take you through. So maybe then we will go it and understand more about when we see the returns and everything more in detail once it is required. So this is the Goods and Services Tax Portal of Government of India. Okay. So here, if you want to register yourself, so you can go and register yourself. Okay. So you say that for new registration, you are what? You are a taxpayer, you are a tax deductor, you are a tax collector, you are a GST practitioner. Okay, because if you are a person who is practicing, chartered accountant or a lawyer, you can get yourself registered for filing the returns of your clients. Non-resident taxable person, okay, like this. So there are a lot of categories. So you can just state which state you belong, which district you belong, legal name of the business, permanent account number, email address. So all this you need to mention to get yourself registered for the first time. So if you're going to start. But we'll go to this portal and show you the live, examples. I'll explain through how your returns are filed and what all information is available. Okay, this is a very automatic system. Okay, and was designed, I think, by TCS and Infosys and other companies for the Government of India. So it's all well connected all over this thing, and you can even access through your mobile. You can raise your invoices, everything. It's a very user-friendly kind of a thing. So application file form number GST REG01 online on GST portal. Verify yourself and you will get a 15 number. So non-compliance attracts penalties. So if you are eligible for registration and you have to get yourself registered and you haven't, so then there will be a fine which will go up to 10,000 rupees, a fine up to 10% tax due, minimum 10,000. For deliberate evasion, a penalty of 100% of the tax due. So cancellation, so you can even, if you have suppose, discontinue your business, you can even, go and cancel yourself, okay? Or sometimes the government may even cancel you. And then if the government has cancelled your this thing, then you can again go for the revocation of the cancellation, suppose by mistake, or you are still doing business and you are not able to file the return for some time, so you can just go for that. Then the last is GST returns after the registration. So after you are registered and you are doing business, you have to file some returns, okay? Monthly, quarterly, yearly. So we'll talk about these returns more in detail, okay? And we'll go to the portal and understand what these returns are. So that's a very interesting part. So this is again a repetition a little bit because I added few slides. Earlier, its slide was starting from here. So GST registration is an online process where the GST law implies that any business entity should obtain a unique number by the concerned tax authority for collecting the tax and availing input tax credit. Okay, it is a PAN-based and state-specific registration. So wherever you are in whatever states, so you have to get yourself registered. Okay, even if you are doing business in 3 or 4 states, you can have 3 registrations, separate registration. Or within one state, if you are into various kinds of businesses, okay, you can have multiple registrations also.
So what about businesses with franchises?
What is?
Businesses with franchises in various states.
Business?
With franchise in various states. A single brand, but
then the franchise, the person who is doing the business there, your franchisee, he will get himself registered.
if it's an independent shop, they should get a separate GST
Yeah,
for that particular.
absolutely. Your registration is not going to help them. Okay, fine.
No, even if the company itself, the franchisee company, if they have multiple
Yeah.
branches in various states.
Yeah. So we'll talk about that, don't worry. अभी आज चल रहे हैं धीरे-धीरे, we'll come to that, okay? Fine, so this is the format of registration. Fine, you just park your question for a while and I'll answer them at a later stage, okay? The first 2 digits represent the state, okay? So it's a 15 digit, first 2 digit will be state, okay? Like 22 is, for example, 29 is Karnataka, 07 is Delhi, okay? So then your 15 digit, 10 digit permanent account number, then you have the 13 digit will be assigned based on the number of registration within the state, okay? Fine. So if you, as you said, you're franchisee and if you're doing some business there, you get yourself registered if you want to file the return for that particular state there, okay? Fine. And if you get some benefit, it's up to you basically. If you are not making any sale and if your franchisee is making all the sale and he has to pay the tax, then you don't have to get yourself registered, isn't it? If you're, you have all the business in franchisee, or if you're doing your company owned showrooms also and you have given it on a franchise to someone, so it will depend upon, who is required to pay tax. So the person who is supposed to require to pay tax, he has to get registered, either you or your franchisee. For that, the registration is must for the person who is going to collect the tax and deposit, okay? The 14th digit will be Z by default and the last digit will be a check code. So this is the 15 digit this thing. Now, interstate stock transfer. So this is a very important one. See, what happens is when you are doing an interstate stock transfer. For example, in earlier era, before the GST came in, people could, when people do business, so they can sell, from goods from one place to another, to their branch or through their godown. Then in that case, were not supposed to pay any tax. So the tax was basically a sales tax. So when you are selling goods from, say, Kerala to, say, a place called Gwalior, and your own godown, then you can just simply transfer the goods to your godown. You don't have to pay any tax, okay? Fine. So it will carry that document which say that you are selling, you are transferring your goods to your own godown. So nobody is going to, not any place in anywhere in the transit, nobody is going to raise objections. The check post and all, they check your papers, say it's interstate transfer, it is a stock transfer, so you don't have to pay tax on that. Now, just to give an example, when I was working in a company called SRF, we were buying our raw material from Travancore. So there is a company called FACT, which is a fertilizer company, and their byproduct is a product called caprolactam. So that was our raw material, and we are using that caprolactam and producing tire cord fabric, which becomes a intermediate product, which becomes an input for making tires in India. Okay, so we were buying the raw material, which is called caprolactam, from which is again a petroleum product, so or a petroleum byproduct. So we were, or rather it is a fertilizer byproduct. So when we are buying from Travancore and bringing those goods to Gwalior, they were charging sales tax. Okay, so they were charging, the tax is about 4%, but it's around 10%, but you have to pay 4% if the other person is also registered. Okay, because he is not your ultimate customer. So then you can just give a form that you are going to use it for making some product which is going to be sold to some another industry. So in that case, we were paying 4% tax. Okay, so it is called Central Sales Tax Act, CST. So we were paying 4% CST on whatever we were buying from Travancore, and it was a huge amount of value. Like we were paying almost like 2 crores of tax, which was 4%. Okay, to the government, because we were buying the caprolactam raw material. It used to come to us, and the tax burden was about 2 crores. Okay, approximately. I don't remember the exact. Maybe it was a very big amount. So 2 crores. So we wanted to avoid that. Why should we pay tax? Because in place in Gwalior, we were in a industrial area where we were given about 15 years or 20 years of tax exemption, sales tax exemption. That time there was no GST. So even if we sell something to someone or buy something from some manufacturer, we don't have to pay any tax. Neither we charge tax to the customers, nor we pay tax from our suppliers. So here the goods we were buying were from, and that was within the state. Okay, if you are buying something outside the state, then we have to pay a tax. Okay, So then, an idea came that what we'll do, we'll ask FACT, Travancore, to transfer the goods in a godown in Gwalior and sell those goods from there to us. So when they transfer it, they don't have to pay any any CST or any sales tax. That 4% which they're charging, they're not going to pay. And then from there, they're going to raise an invoice. Okay, so it will be their sale within the state, and we are going to buy from them. So we don't have to pay any tax. So in this way, we are able to avoid a complete 2 crores of an expense and save reduce our cost. And now FACD, they were not having any customer other than us. They were not having any other customer. So they were just bringing those goods to the godown, and the goods were not even unloaded on a godown. They were immediately sold to us. Okay. Now sales tax authorities, when they saw this happening, they said it's a predetermined sale. They said it's a predetermined sale, and there were some cases earlier also. If such is the case, then you can't take this benefit. Then it won't be called an interstate transfer. So they went to the court, and we also fought, and we said that it's a godown, and then we asked FACD to make some invoices in favor of some other companies from there, 1 or 2, so that it doesn't become a predetermined sale. And then we asked them to destock the goods in Gwalior godown and then again load it on a truck and sell. So we're trying to make some kind of evidence so that we can tell the authorities that it is not a predetermined sale, because it was in a huge amount of money which we were paying. Now when the GST came, so they came to know this was a problem, and they wanted to address this. So they said what? Supply of goods and services between two distinct persons having different GST in the course of business is subject to GST. So when you are supplying the goods and services between two different persons which are having two different GST numbers, that will attract the GST. Okay. This covers even interstate stock transfer and branch transfers. So they said, even if you are making a branch transfer or a stock transfer, then the person who is making a branch transfer or a stock transfer, he has to charge GST to his branch. He has to raise an invoice. Irrespective, you say it's a branch transfer, that means the FACT, Travancore, when they are raising an invoice, they have to charge GST on that, even if they are selling to their godown in Gwalior. So this the rule was changed. Otherwise, this is that if you are having a 2 GST number, then only you are supposed to pay tax. Okay. The branches were supposed to also get themselves registered. So they were also having a GST number. Okay. So for instance, the supply of goods and services by Punjab branch of Limited of Maharashtra branch, for instance, supply of goods and services by a Punjab branch of X Limited to Maharashtra branch of X Limited is subject to GST. Of course, the input tax credit is available to Maharashtra branch. That means first the goods are being transferred from Punjab to Maharashtra. So tax is paid. Okay, so Punjab, a guy is going to collect GST from the Maharashtra branch. Maharashtra branch is when he is going to sell to the ultimate customer, he will get the input tax credit, which means that there is no cost to this thing. So there is no, it's a pass-through. There is no burden as such, isn't it? So Punjab branch charges GST for its stock transfer to Maharashtra branch. Let him charge. When the Maharashtra branch is going to sell, he is going to take the input tax credit when the Maharashtra branch makes a sale to the customer. Okay. So in this way, this became a kind of a loop hole was plugged, that you pay even tax even if you are transferring goods from within the organization from one branch to another. Now this was also not liked by the industry, because it was increasing the cost of compliance, and first the Punjab branch has to pay the tax, then he is going to Maharashtra branch is going to recover it. So suppose Maharashtra branch sells the goods after 6 months, so that amount remains blocked. That means there is an additional working capital requirement of the company goes up. So it was adding on the cost to the organizations in form of working capital. That means they have to pay interest, or suppose their money is blocked, either they take the money from the bank as a loan, or they use it from their profits. Anyway, it is going to affect the business. Okay. Likewise, services provided by telecommunication companies or banks to their branches in another state is subject to GST. Okay. So likewise, services provided by telecommunication companies or banks to to their branches in another state is subject to GST. Now here also, I'll just give you an example. When I was working in Idea Cellular, which is a telecommunication company, so our head office was, giving TV advertisements for our mobile telephoning, that you can use mobile, like Airtel and a lot of TV advertisements come for all those telecom players. And initially it was so much that after every 5 seconds there will be an ad of either Idea or Airtel when the telecommunication started in India, or Reliance. So now everything was organized by the head office. The bill will be received by head office, and the bills will be of crores of rupees, which will attract GST, isn't it? So head office has received a bill where they have paid 1 crore of GST on all TV advertisements. Suppose the TV advertisement costs, say, 20 crores, okay, and suppose GST is 18%, so it will be a big amount, okay. So now they can pass on this GST to their branches, okay. So that means they will raise invoices to all the branches, like, Delhi, we used to call, circles, like Delhi Circle, we have Maharashtra Circle or Karnataka Circle, we are all providing telecom services. So our head office at Bombay, they will get the bill, okay, and then they raise invoices on all the circles on the basis of their number of subscribers. For example, they are spending a crore rupees on GST, so they need to pass on that GST to everyone, because all the branches or the circles, they are getting the benefits of those advertisements. So they'll devise a mechanism through which they are going to pass on that expense on the basis of how many customers each circle has. Okay, fine. So we used to call them subscribers. So on the basis of the subscribers, they are going to allocate those expenses. Both the advertisement as well as the GST component will be invoiced to the branches, okay, or the circles, and then we can take the input credit, that GST what we have paid. As suppose I was working in Delhi branch, so we used to get a bill of, say, 10 lakh rupees of all that advertisement portion, on which we have paid suppose 1 lakh of GST. So that 1 lakh GST we can take an input credit on our final invoices which we are raising on customers, because when we raise bills on the customers, when they use the phone, we have to charge 18% GST. So we will charge 18% and take the input tax credit, only deposit the difference with the government. So for us, the cash flow will be only the difference. We have already paid that amount via an invoice from the head office. We have already suffered, so we will be allowed an input tax credit on our output when we are selling to our customers. So whatever the GST we have collected from the customers, we need not deposit 100%. Whatever we have deposited on, say, those bills which we have received from head office, we will get the credit. Have you got it? Is it clear? Again, we are going to discuss the input supplier, this case also through an example later on, a practical example. So distinction between goods and services. So GST is applicable whether it is supply. So Ananya is there? Can you read?
GST is applicable whether it is a supply of goods or services. However, distinction has been made in few cases. This distinction is relevant to a certain places of supply, time of supply, valuation and compensation scheme. There are some suppliers which are neither goods or nor services. For instance, services provided by an employee in the course of employment is neither treated as supply of goods nor services. These cases are specified in Schedule 3.
Okay, so GST is applicable whether it is supply of goods or services. So whether you are supplying goods or supplying services, GST is applicable. There is only one tax now. Earlier there used to be a service tax, and there was a sales tax, okay, or any other tax. So now we have earlier there was a service tax and excise duty. On manufacture there was an excise duty, and on goods and on sale of supply of services there was a service tax. So everything has become now part of one. Okay, the distinction is relevant to ascertain the place of supply, time of supply, and valuation and compensation scheme. Okay, so basically from where the goods are supplied, and at what time the goods are supplied, and how you are going to value it. Now the valuation, the place of supply and the time of supply is a very important concept under GST, which we are going to dwell more over the time. Let's talk about the valuation. Now whenever a person is raising an invoice, recently there is a case of Zomato. They were being slapped with a lot of penalty. What was that? Anybody remembers that? Zomato got a huge amount of show cause notice to pay tax. They have been evading tax, GST. What was that? Have you read that in the newspaper? Just try to Google and find out. When you buy goods from Zomato, what do you do? They'll send you the food at your house and they're going to charge some delivery charges. So on delivery charges, they were not recovering any GST. They were recovering the GST only on the food item. So whereas,
Not on delivery charge.
not on delivery. So as per the GST, you have to, the valuation for the purpose of charging tax has to be including everything. That means whatever you are invoicing in form of supply of goods or services plus any charges thereon, everything should become part of, for charging the GST. So they evaded that. So they were, they got a demand for that. Have you got that? Padhi, just read that.
So Zomato faces a hefty 803.4 crore GST demand from Thane Commissionerate for alleged non-payment of taxes on delivery charges between October 2019 and March 2020. Demand includes 401.7 crore in GST liability and equal penalty and interest. Zomato plans to appeal, asserting a strong legal stand.
Okay, fine. So anyway, they would be contesting it, so I don't know what they will be doing. But now the valuation is very important. So we must understand what is the value at which we have to charge the GST. You can't say that these things are exempt. I am going to charge GST only on the components and rest are exempt. Okay. So if they are exempt expressly by the government, then only you can claim the exemption. Otherwise, you have to pay tax on everything what you are collecting from your customers. So that is the law, what it says. I don't know how the Zomato is going to fight this case, but we need to understand, what was the law and what there were any changes brought in that period. Okay. So, so the time of supply and pace of supply, we are going to understand later. Valuation and the compensation scheme. Now, when you are, there are certain goods on which you have to pay. That is not that compensation is. That is the sin, not the sin goods is referring to. Okay. So, and there are certain suppliers which are neither goods nor service. Like for example, employer-employee relationship. When you are drawing a salary from a company, when you are working for a company, the employer is not going to charge any GST on you. Raise a bill on you. Okay. Or you don't have to raise a bill of your salary and say that I am going to charge GST, because employer-employee is outside the ambit of supply as per the GST. Even if as an employee you are offering services to the organization, so you should raise an invoice to your employer and charge GST and pay to the government of India. That's not the case, because GST is exempt on such kind of relationships. Now these cases are specified in Schedule 3. So this is one such case. Okay, fine. There are other cases, we will talk about them separately. GST is applicable, consideration. Okay, Ananya?
GST is applicable if goods or services are supplied for a consideration. Consideration need to be in cash. It may be in kind. If consideration is nil, GST is not applicable.
So that means if you are going to, if you are going to charge a money from someone, then you have to pay GST. If you are saying I am just selling it free, I am not going to raise any, a bill, but it has to be a free zero bill, then there is no GST. Okay, because you are not recovering anything. Okay.
However, activities given in Schedule 1 are subject to GST, even if there is no consideration. For instance, supply of goods or services by a taxable person to a related person are subject to GST, even if the consideration is nil, or even supply is by way of gift.
So that means there is some kind of a bar here. If you are selling goods to a related person, or if you are making a gift, okay, to a related person, that case you have to still charge GST. Okay, so we'll understand this little bit more. Now, all these slides which I am just showing you, this is just a basic knowledge, but we are going to dwell into all this wherever we think needs to in our subsequent lectures.
In other words,
Yeah.
free gifts to a related person is subject to GST. Employer and employee have been treated as related person for the purpose of GST. For instance, if an asset is gifted by a company to its employer, it is subject to GST, even if consideration is absent. In the case, GST is applicable. However, gifts up to ₹50,000 in a financial year to an employee is not subject to GST.
So if an employer gives some gifts to the employee, okay, so in this case, employer-employee related person. So the employer needs to pay tax on any goods which he transfers to the employee without charging any consideration. Suppose the employer says, I'll give you a free car. So he can charge nothing for the car, but he has to pay tax on the GST component, he has to pay tax to the government. But up to 50,000, gifts are exempt under GST for the employer-employee relationship. So if there's employer gives a laptop to the employee, which is worth 45,000 or 50,000, then there is no GST because this is exempt.
Supply by way of gift between unrelated person is not subject to GST, but input tax credit will have to be reversed. Gift to unrelated person is subject to GST.
So, but if suppose you have sold you have gifted to someone, okay, some goods, okay, then if you have taken a GST input credit on that item, you have to reverse it. Suppose you bought something as a, for example, you have bought something and gifted, suppose as an employee you bought something, okay, and instead of selling, you gift it to someone. And on that goods, whatever GST you have paid, okay, because you are eligible for input tax credit for that goods from your final customer, you will not be eligible in this case because you have given a gift of that product or that raw material or that whatever goods you are supplying to someone as a gift, but you have already availed a GST, you have paid the GST and availed the GST input because that goods which you have bought from someone, you have paid some GST, okay, and you are allowed for GST input credit. When you sell final products to your customer, you are going to avail that input tax credit, okay. So here you are not allowed for that. I just gave an example, but there are a lot of examples at the end through which you understand about the input tax credit which I am talking about. Just to give an idea, like suppose for example Maruti, they are selling cars. Assume they are selling cars directly to the customers, not to the distributors, just to make the example simple. So now they sell the cars to the customers, and when they manufacture the car, they have to buy tires from say Seat tires or JK tires or Dunlop or whatever company. They will buy tires and they will be paying GST on those tires, isn't it? They will buy say engine or some other paints because the car needs to be painted, so they are going to buy paint and paint the cars at their manufacturing place. So they are paying they are buying a lot of goods on which they are paying taxes. Okay. Now all that GST which they have paid on all the material which they are using for converting that into a car, suppose amounts to 70,000 rupees. Okay. And what do you say? Okay. Achha. When they sell the final car to the customer, suppose the car attracts a GST of 1 lakh rupees. Okay. Fine. So customer is going to pay 1 lakh to Maruti, isn't it? But Maruti has already paid 70,000 rupees taxes. So Maruti is going to deposit 30,000 to the government of India and take a 70,000 input tax credit. Have you got it? Though the Maruti has collected 1 lakh from you, now as a customer you have paid 1 lakh because the tax has been passed on to the customer. The tax on the final product was 1 lakh, okay. But whatever duties you have paid in form of GST for buying raw material of any kind and whatever taxes you have paid, Maruti will be eligible for taking input tax credit. Okay. If Maruti was not eligible, that means what would happen? The customer would be paying 1,70,000. How? Because the Maruti will account for that 70,000 as a cost, and they are going to recover from someone. Okay. Suppose there is the competition allows you to recover all that, and competition will allow you to recover such a huge amount. You can't sell below that. Okay. So that means the customer will be paying a tax of 1,70,000. So that was the case earlier, prior to GST. Of course, the government has had earlier schemes where you could always take some kind of a credit, but that was called cascading impact of tax. You were paying tax on tax and tax and tax. So that was all been now removed, and Maruti is going to just you will be paying 1 lakh tax, and Maruti is going to pay only 30,000 to Government of India because they have already paid 70,000. Is there any question here? Have you followed? Okay.
What if the item is sold at a discount?
Hanji?
What if the item is sold at a discount? Will the customer have to pay the tax only on the discounted amount, right?
Yeah.
So then the tax amount will be less for...
If suppose Maruti gives some discount.
Yeah.
If the Maruti gives some discount, then the tax collected will be, suppose the Maruti say they pay, they give a tax. Now what happens is, the discount will reduce your taxation, what you are saying. It's fine. Suppose the tax they collect only 95,000. So they are going to get the benefit of 70,000 for the inputs, and ultimately they are going to deposit 25,000, because discounts can be availed, Like suppose when you are selling your car, you can price the car at the price what you want. Whether you price for 10 lakhs or 9,50,000 after discount, that's your, your will. So you have to pay the tax on the final price which you are going to charge to the customer. You say that I am going to sell the cars at 10 lakh, but particularly for this week, I am going to give you 10% discount. So in that case, you also lose and the government also loses money. Okay, fine. So this is again understanding little bit back what we have done. So this is the threshold limit for GST registration. Now this is the same thing which I added some slides, so they are again getting repetitive. So I'm just going to read something which was not there. So here the aggregate turnover includes. So this is basically all the businesses, they need to get themselves registered. Okay. So if your threshold limit is given in this box, which I have already explained. Okay. But he talks about aggregate turnover. As he was mentioning that aggregate turnover includes taxable supplies, exempt supplies, stock transfers and exports. Even whatever you are selling, it will be counted for the purpose of your aggregate turnover. Suppose you are selling goods worth 50 lakhs and you are exempt goods for 20 lakhs. So your actual turnover is only 30 lakhs. So you say that I am exempt from tax. I need not get myself registered. No, because you are also selling certain goods which are totally exempt. Okay, you have to add that up. If you are making some exports, exports are also exempt from GST. Okay, so you can't exclude those and say my turnover is below 40 lakhs as a good supplier. Okay, or you can say these supplies are exempt, so I am selling below 20 lakhs. So you can't take that. You have to take aggregate turnover. Okay, now it is calculated on the basis of all India basis. Of a taxable person who has the same PAN. Just read, Ananya, this from here.
Calculated on all India basis of a taxable person who has same PAN for income tax.
So that means one PAN, you have got 10 registrations. So for all revenue which you have generated under one PAN will be aggregated. You can't say that this business is in Maharashtra, this business is in Delhi, this is in Kolkata. So all business under one PAN will be considered as one. Okay. For the limit which has been mentioned here.
If GST is payable under reverse charge mechanism, this exemption is not applicable.
Okay. If GST is payable under the reverse charge mechanism, this exemption is not applicable. Suppose if you have to pay GST under the reverse charge mechanism, in that case, you have to get yourself registered, irrespective of these limits. Okay. Okay, so we talk about a little bit about reverse charge mechanism, and then there is a special slide which I prepared in the morning, so I'll just share with you that. Okay, read this.
GST is normally payable by supplier of goods or services. In some cases, however, the recipient is liable to pay taxes under reverse charge mechanism. If the tax is payable under the reverse charge mechanism, it has to be paid by cash via internet banking. Input credit cannot be utilized to pay GST liability under reverse charge mechanism. However, once tax is paid by the recipient on input under RCM, input tax credit is available to him if he is otherwise eligible for input tax credit.
Now, as I told you, there is something called reverse charge mechanism, okay, where the supplier doesn't pay the tax, it's the recipient who is supposed to pay the tax. Now, one of the services which we'll understand is if suppose I am taking a service of a lawyer. Okay, so lawyers come under the RCM. That means the company pays, takes an advice from a lawyer, and lawyer raises a bill of 1 lakh rupees. And on GST on, those consultancy services is 18,000 rupees, 18%. So that means the company who is availing the consultancy of a lawyer has to pay 18,000 to the government and not the lawyer. Okay, fine. And he has to pay that in cash. He can't, take the input tax credit route. He has to pay in cash. But once he has paid, so it will be presumed that he has paid 18,000 GST. He can now take input tax credit from his output supplies. Okay, just like a Maruti can take input tax credit for all the items which they are buying and paying GST. Now the input tax credit they can avail on the lawyer services, whatever GST they have paid. but they can't, they have to pay this in cash. Okay, fine. So that's the condition. Just another couple of minutes, then we take the attendance. So this is the graph. So normal GST payment, it is basically the supplier of goods will pay to the government. But in case of a reverse charge mechanism, it is basically the receiver of goods pays the money to the government. You can just refer to your slides, it's a very easy one. Just read it.
As per the new provision, instead of coverage of all the registered persons, now the government shall specify the class of the registered person who shall be liable to pay tax under reverse charge basis. As per the new provision, instead of coverage of all the taxable supply of goods or services or both, the government shall specify categories of goods or services or both on which reverse charge provisions are applicable when such goods or services or both is received under the unregistered person.
Okay. Now, just we are going to finish. This is the last one. I'll just going to show you that who are the people who are the services covered under the reverse charge mechanism. Okay. Services provided by an individual advocate or a firm of advocates by way of legal services. So that's one. Okay. If you are taking legal services from an advocate or a group of lawyers, then the company who is taking a legal services, they are supposed to pay the tax to the government and not the lawyer. Okay, fine. So that's the case. Then services provided by good transport agency in respect of transportation of goods, taxable services provided. Just read this, okay, in your this thing, and then we are going to have the attendance. So services under reverse charge mechanism. These are the services which are covered under. So one of the services is a lawyer. Service provided by a good transport agency. Like suppose you are getting your goods moved from one place to another. So the transporter is not going to pay the GST. The person who is availing the services of a GTA, if it happens to be a company, they are supposed to pay. Okay. Taxable services provided by any person who is located in a non-taxable territory and received. Suppose you are getting goods from outside India. A company is buying certain goods from outside India. Now that person who is selling the goods to you, he doesn't have to pay tax because he is in America or somewhere. Now the company who is buying the goods from that company from abroad, he is supposed to pay the tax. Okay. Services provided by an insurance agent to any person carrying on the insurance business. We are going to dwell on that more later on. Okay. So